Good morning, everybody. Chris from Serene Education with my lesson this morning for Monday, the 21st of January 2019. Hi guys, hope you had a fantastic weekend with family and friends. I hope you are well rested. And guess what? The start of a new week, which means there are other issues to be looked at. In particular, we have continuation of the Brexit debate for the Prime Minister this week. This afternoon, she proposes the Plan B. So the so-called Plan B to the House of Commons this afternoon. So if you are trading any pound crosses this afternoon, or pound crosses, or looking to trade pound crosses this week for that matter, do so understanding that there could be further volatility as we hear the Prime Minister's Plan B, so-called Plan B, that's going to be presented to the House of Commons this afternoon. So we could expect volatility pre-news announcement and after the news announcement, and then continued volatility during the course of this week as the debate goes backwards and forwards regarding Plan B. So there again, as I mentioned to you last week, we're not out of the woods as yet. After last week's debate, or debacle as well, there's still a lot of unanswered questions, and we don't have a signed agreement on Brexit. Until such time as that happens, we still have until the 29th of March of this year. You're going to bet your bottom dollar there's going to be a lot of to and fro between members of Parliament regarding this so-called Brexit plan, Plan B, and it'll also be interesting to see if Theresa May can get this Plan B signed and dotted by her the House of Commons, but also if Plan B goes on well with the European Union. That's the most important part of the whole thing. They might just say flatly, sorry, not interested. We're giving you what's the best plan, or the best possible deal that we currently have, or willing to do. So no, and yeah, this is where the volatility starts to kick in. So if you're trading any pound crosses or looking to trade any pound crosses, understand the risk implications due to that. So it'll be an increased volatility. And if you are trading with small account sizes and the stop placements are going to be far too great, you might want to give it a large berth and look elsewhere. There'll be other opportunities out there on the charts. Look to risk-averse positioning. You might find investors would far rather just stay away from the far more volatile markets, non-directional ones, and then look for smaller percentage returns on the risk-averse opportunities out there, just to limit the amount of exposure to risk that we currently are viewing on the global market. Another one is China. Further signs that the Chinese market is starting to contract even further. The Chinese the Public Bank of China has pumped in a lot of liquidity in this market to try and stimulate the internal market, and I think the Chinese are going to be trying to focus on that, is to try and wean themselves off for having to depend on exports, but also to try and work on their middle class, the internal market, the Chinese market, to get more robust growth within those markets, to see a far stronger China as we head further into into the future. Okay, so there again, China's going to have a major impact on any economies within the G20 or G7 that rely heavily on exports to the Chinese economy. So there again, the Asian basin countries in particular would have a knee-jerk reaction. There again, look at the Australian dollar, the New Zealand dollar, the yen, and all those other smaller ones. Do you see any further reflection on that? And also the emerging markets, there's also a opportunity there. So let's have a look at the four majors this morning. I'm going to spend more time looking at the four majors. I'm going to apply the Forex MATZ template to those, and then we're just going to go through them systematically one by one. So I have the euro against US dollar open in front of me. I've applied the Forex MATZ template to that particular chart on the monthly time frame, and now what I'm going to do is I'm going to spend more time just going through them systematically, the time frames that is, to get a better understanding of what's happened over the previous week, and to see how that can then give me further opportunities on possible opportunities with this particular pair. So we know that the euro had a very weak year for 2018 for the euro against US dollar on the dollar strength, and we've fallen now down to a level where we've had price support and resistance, or consolidation for a better word, over multiple years. And you can see that the apprehension, the uncertainty that's presented itself through 2018 is pretty much there on the chart to see. We circumnavigated, we actually fell into the 50 period moving average and then found support there through 1, 2, 3, 4, 5 consecutive months. Then the October candle gave us this nice bearish engulfing candle with very little wick after almost 5 months of indecision. Gave us a nice bearish engulfing candle below that level, which signaled that we should be seeing continued euro negativity as we headed into the latter part of the year. But that failed to materialize because the August, September, October, November, December candles, you can see they all drove down into the August low, but failed to continue that sentiment heading into the new year. November gave us this indecision candle, and then we looked for a decisive candle on the December close. It didn't close above the November candle, and ideally, that's what I'm looking for. If it's this to be a very strong support mechanism on the 50 period moving average, I need to see more signs of bullish underlying sentiment coming through. There's a weak morning star formation here. Weak because it hasn't really closed higher than the previous indecision candle. And any strong morning star, you would need to see a nice follow through in the opposite direction to really indicate what a morning star represents. A bias of upside, bullish bias of buying coming into the market after a prolonged period of selling. And clearly we have that. Selling throughout 2018 into a strong support or a long-term support and resistance level, consolidation, and then we want to see the increase. So far this month, we've seen a little bit of a move to the upside, but not enough to really give us a gauge of genuine reversal. So there's still, even though it's pausing, there's still a sign of weakness for the euro. We had initial buying coming in, but this clearly could just be consolidative buying after a lot of fall or negativity through 2018. So if we are to see any further highs being posted, if there's a very strong support mechanism being forged, then the November high needs to be where we need to be trading above and remaining above. So far for January, we've seen price heading above it, but now we've contracted below. We're actually trading lower than the December close, back within the December range. So therefore, we're likely to see on the lower time frames a lot of volatility, consolidation volatility. So there again, I'm going to draw the line on the chart here at the low just to represent the 50 period moving average, but also the August lows that we need to be below. And then I've drawn a line above the November high, which is where we need to be above if we are to see further extensions to the upside. The indicators. So you can see price trading between the two moving averages, which is not conducive of a very strong long-term trend. Ideally, we need to be trading below both moving averages for a negative trend, or above both moving averages to represent a strong uptrend. RSI is below the midpoint and flat, therefore you can see the last couple of months price has been flat herself. MACD, fast line below the slow line, histograms below the midline. These are all negative signs, but you can see that the sell-off has been weak or grown weaker because the histograms have actually moved back towards the midpoint instead of continue to drop to indicate continued selling momentum. So therefore I'm getting a representation from the indicators that I can clearly see that on the chart. Down to the weekly, you can see that consolidation is clearly there to see. Okay, there's a lot of hesitation, consolidation at this particular point, which is the 200 period moving average. Now, as I mentioned to you, we need to be trading below the August low, which is all the way back here of last year, and you can see that we had multiple occasions where price was actually trading lower than this particular point, lower than the 200, but it failed to close lower than these particular points. We ended up seeing retracements on any of these opportunities to the downside, which gave us these extended wicks, which is not ideally what we want to be in. Okay, so here again, hence the reason why we need to see a statement of intent. Intentional closed low would then indicate continued selling bias, and that would then represent an opportunity for us then to readdress the market in terms of an entry signal, and then we can trade with more certainness, higher probability, lower risk, that we should be looking down towards 2015, 2016, 2017 low points as a viable target for 2019. So there's an excess of there of 900 or perhaps just short of 1,000. So there's a lot of bang for buck if we do continue to see that. But as long as she trades at this particular point, not failing to make a new low, then ultimately we're starting to see more bullish underlying sentiment coming in. Hence the reason why we have this weak morning star on the monthly time frame. But I've always said, if this is to be an indication of a potential retracement because of the morning star, we need to be closing above the November candle high, which is this vertical one over here. So therefore, you can see 2 weeks ago we actually saw buying coming in, but it failed to materialize, and we saw a sell-off last week. It's important that we get above this to then see this 50 period moving average as a viable opportunity to the upside. A morning star, a stronger morning star, would then indicate a greater retracement, and heaven forbid, if we did get above the 50 period moving average, we could always look towards a 2018 high point as a viable target as we head further into 2019. Either side, you can see now I have two planned objectives. If we get a break low, 2015 low. If we break high, The 2018 mid-range high point would be our first target, and ultimately back up towards the 2018 high point would be our second target. There again, I need to see statement of intent. Currently, as long as price trades within this consideration, I'm not willing to take any trades. Far too much risk. I'd rather wait, be patient, and if I do get a decent bite on the hook, and it gives me enough sentiment behind that, then I'm more willing to wait for that. Until then, I'm just going to sit on my hands and wait patiently. On to the pound against US dollar this morning for Monday the 19th of January 2019. I'm looking at the pound against US dollar on the monthly time frame. I've applied my Forex Made Easy template to this time frame. Let's have a look at the closer edge here. So very similar to the euro against US dollar. Price has failed to make a new low since August. It's tried to drive low in December and January, but failed to do so in terms of a close. And that's what I'm looking for at the moment now. There's a lot of risk attached to this one, particularly because of Brexit. We're getting closer and closer to that D-Day, and Theresa May has failed to get her vote approved by the House of Commons, and now we're in a standoff, and she's this afternoon going to represent her Plan B to the House of Commons. So we could expect, as I mentioned to you earlier, we could expect a lot of volatility as she presents that second case for her Brexit deal. Okay, so and that's going to lead off right through until March the 29th of this year, as the Prime Minister tries her best to try and get her agreement passed through the House of Commons. At the moment now, she's going to have to then go back to the European Union sometime this week to present her Plan B to the European Union members to see if they do agree that a softer approach to the Brexit deal is what's required. But if it fails yet again and the EU say, sorry, we've given you the best possible deal, we are in a very precarious position now where one could see potentially a referendum or a new vote being taken before the 29th of March. So things are starting to hot up, and because of that, we're going to see a lot of volatility creeping back into this particular pair. You can see that we've had a lot of wicks on these candles since August, and the last couple of months have given you a lot of indecision. The November candle, December candle, very, very small, large in their actual ranges, but the bodies themselves are very, very small. So it really emphasizes that the uncertainty of volatility between buyers and sellers is clearly there to be seen. So if you put these two candles together, the November candle and December candle, put them together, you're still left with a spinning top, which is a sign of indecision. So there again, we need to see a decisive movement, a clear bullish or bearish decision on the monthly candles will really represent opportunities of continuation of continued selling sentiment we've seen throughout 2018, or a bull market rally to the upside would then emphasize that this is clearly a major support level, and we could look, heaven forbid, up towards that 50-pair moving average for 2019 as a viable target level, which will take us back towards those support and resistance levels that we saw through the early parts of 2018. Okay, so roughly 800 odd pips to the upside if that was to materialize. And you can see that the 50-pair moving average has done a fantastic job over the past 4 years of resisting price whenever she's got to that level. So that would be a viable target level. If, heaven forbid, we did see pound bulls coming in to really strengthen the picture. Now, in terms of the indicators, you'll see that the two moving averages are well above price, so clearly indicating that this is still a strong negative trend. The RSI is below the midpoint, but you can see it's flat. But there again, price has also been flat for the last 4 months in particular. The MACD, still negative. Fast line below the slow line. Histograms are below the midpoint. The only sign over here is the histograms have got weaker. They actually flattened off. But there again is reflecting that there's no clearly selling bias at the moment because we haven't made a new low. Okay, so we now understand that we are clearly in a consolidation in a negative trend. Drop down to the weekly. There we go. You can see the last month or so we've seen a retracement, and we saw a lot of volatility on last week's close after the debacle we saw at the start of last week. And yeah, you can see that there was a lot of volatility on last week's candle. 345 pips as well. Overall, you can see that there was a lot of uncertainty between buyers and sellers, and clearly because of last week's debacle within the House of Commons, you can see that played out on the chart itself. Both moving averages still above price, which is a negative sign. The RSI is below the midpoint, it has retraced, but there again, it's done exactly what the price has done, retraced, but it's flatlined. And so there again, you can see it's flatlined as well on price action. MACD, fast on above a slow line, histograms above the middle point. Now we're seeing a change in market sentiment from more of a bearish stance to a positive stance. But notice through this period of year, even though we had weakness in the pair, you see the MACD was choppy. So here again, you can see that if I draw a line above the highs that we've just seen recently, you can see last week's resistance level high at that same point. So here again, as I mentioned to you, pound is going to see an increase in volatility because today and the remainder of this week, today in particular, we have the Prime Minister trying to present her so-called Plan B, after Plan A failed miserably in the House of Commons. Her Plan B, she's going to actually pitch it to the House of Commons this afternoon, and people obviously going to be scrutinizing that. Both MPs as well as the media are going to scrutinize that to see if it is genuinely the best second deal possible for the UK. And there again, that creates volatility. So expect to see further volatility this week. Okay, and I mentioned to you, we're going to continue to see a lot of volatility until the 29th of March. And even after that announcement, we could see a lot of volatility in either direction. Continued selling in momentum or buying in momentum, depending on the outcome of that. So there's a lot of risk attached to this particular pair, and any pound crosses for that matter. So keep that in mind. Weekly indecision. So yeah, this week we need to sit back and wait for a decisive candle for this particular pair. Down to the daily. There again, you can see that the last week or so, the last 2 weeks in particular, we've actually rallied. Once we got above the 50 period moving average, we rallied towards that 200 period moving average. But as we got to the 200, people started to close their contracts, and that led to a sell-off, which then gave us this tweezer top. Now, if we have a tweezer top, that represents a strong reversal after a huge rise to the upside. So therefore, depending on how the data gets digested this afternoon, we could see a retracement back, volatility retracement back towards the lows we came through over the last couple of weeks. So that will take us back towards the 50 period moving average, which is 120 odd pips away from where we currently stand. There again, we need to see a closed low. So using the Friday close as a barometer, as a support mechanism, let's draw a line in the sand below that level and say, great, get below that. Then we could see potential close rallies to the low end. There again, speculation, volatility. Okay, yeah, I understand there's a lot of risk attached to that because of this, so keep that in mind. Okay, so let's minimize that. Let's go to the US dollar Swiss franc. Okay, US dollar Swiss franc was quite interesting because we saw the signs of a potential morning star formation here on the monthly, and sure enough, we've got that. Okay, this is on the weekly chart. So on the monthly, you can see that price actually fell down into the 50 period moving average over the last couple of months of 2018. Apologies. So there again, we've got to say to ourselves, well, each time price has fallen to the 50, she's always retraced aggressively. She's counter retraced aggressively. So there again, we could have looked for signs for entries on that retracement. The first initial target would be the December high point, because that's how it is at the moment. Now people look to take opportunities towards a previous support and resistance level depending on the retracement. So this month so far, if there was no further selling and price actually started to find a lot of support at this particular point, one could always then look to trade back up towards the 50 period moving average. Sorry, not the 50, the December high. Get above the December high, then price could then rally up towards the 2018 and 2017 resistance level highs, which is the November high candle herself. Get above that, well then there's a lot of support and resistance levels through the 2015 and 2016 resistance level highs. So we have viable target levels to the upside. Indicators that the price is using the 50 as a very strong support, but the 200 is still way above price. You can clearly see on the chart. But that could always be our long-term target if we continue to see dollar strength. RSI has been above the midpoint, but she's been bouncing, skipping along the 50 period moving average, and here again she's actually skipped once again on the hard right edge on the upside candle that's been created so far. The fast line is above the slow line, histogram is above the midpoint, so here again momentum is clearly in favor, but we did see a sell-off for the last couple of months, and we're starting to see strength coming back in again. So this month, in the next 9 days or so, can get above the December candle close. The histogram would then reflect a positive bias because she'll be then trading higher than the December close, which would then emphasize a continuation in this case, and then we could look for more assertive moves to the upside, i.e. to the November high that we saw at the end of last year. Down to the weekly time frame, there we go. This is a nice sign over here for potential opportunities, because now what we have is we have a morning star. But the morning star has got to come off the back end of some selling, and sure enough, we've seen selling throughout the latter period of 2018 from November highs down to this particular point. Notice the 50 and the 200 are still below price supporting her, so we have a nice support mechanism in play to create this strong foundation. So we have a bear candle, indecision, bull candle. So this is our morning star, and if that's clearly the case, then ultimately what we should be looking for is entries through Monday, Tuesday, Wednesday, Thursday, Friday of this new week, and then we can start to look towards those levels I mentioned to you over here, but ultimately back up towards the 2018 November high as a viable target level as we head into the latter part of January of 2019. So, RSI above the midpoint. MACD still not caught up yet. There's been so much volatility and the moves have been so aggressive that these indicators haven't been able to really play catch up. We have signs of a decrease in sell-off because the histograms have got weaker. There's still selling sentiment on here in terms of the fast line still trading below the midpoint, or the slow line, and the histograms are still trading below the midpoint themselves. But there's been a clear weakness in that selling sentiment on the outcome of last week's, or the last 3 weeks in particular. So my objective this week is to then look to see if price can get above the high that we've seen over the previous week. Okay, we've seen a lot of buying pressure, buying momentum coming through last week in particular. So you saw Monday, Tuesday, Wednesday, Thursday, Friday. You can see after the initial pullback on the Tuesday candle, Wednesday, Thursday, on the Monday pullback, Tuesday, Wednesday, Thursday, Friday, we saw a lot of dollar strength coming back into the market again. So that's going to be where I'm looking to take my first trade. 50, 200 below price of morning, that's a positive sign. RSI above the midpoint, positive sign. MACD fast line above the slow line, histogram above the midline, getting stronger, positive signs. The previous histogram is still higher, so here again we need to see the counter punching high to represent continuation on the creation of that morning star over the previous couple of weeks. And then we have our objective. First one, a knee-jerk reaction to up to this level over here, which is the December high, and ultimately get above the December high. Then we're looking up towards the 2018 November highs as our viable second target. So here again, play caution to the wind. Just play caution to the wind. Okay, here it's so important. Look for a continuation, particularly on a 4-hour candle. You can see the candlesticks have got very low liquidity, low volatility over the last 36 hours or so. So here again, just play caution. Wait for a nice statement of intent. Break high, close high. Make sure that the MACD goes positive again, and then we can catch the similar effect that we saw over the last couple of weeks of that move to the upside. Last one, US dollar, Japanese yen. Okay, monthly. Look at that. We saw a nice bearish engulfing candle on the December close, and that came off that resistance level highs. 2017 was a resistance factor multiplied by 10, a lot of indecision, a lot of apprehension through 2017. Then we saw the sell-off at the start of 2018, but then we saw a morning star yet again on a very strong support mechanism, which was the 200, and on that we saw the continued buying principle coming through right through into the latter part of December, or latter part of 2018, when we started to see selling coming back into the market again after a failed break high at the end of last year, which led to this December candle, bearish engulfing candle, which engulfed all the indecision before, which was a statement candle, and sure enough, people reacted on that statement candle. They sold aggressively at the start of this month, or the start of the new year, down towards those levels. But having said that, they failed to actually hang on to those levels, and we've seen a very strong retracement in the opposite direction. So now you can see prices now reverted back up towards the December lows, and we're trading at that particular point. So here again, we need to be vigilant, because we need to see, if we're looking for continued dollar negativity, we need to see price making new lows. That means remaining below the previous low, and that will be the December low. Currently, you can see it's trading at that particular point. The indicators, price is trading within the moving averages, which is a sign that we have consolidation, and sure enough, we've had a very strong, a very big consolidation over the last couple of years. Okay, so we are trading, we've seen a correction on the lows of that consolidation, so there again we need to be vigilant. The RSI has dropped below the midpoint, but it's flat. There again, price is flat. MACD, flat. Okay, the moving average fast is still above the slow line and the histograms are just above the midpoint as well. So we have, positive stance coming in, but it's flat. They haven't got stronger. We want to see the moving averages on the MACD spreading out to emphasize strength of whatever it is that's doing. In this case, selling, strength, momentum. The histogram's getting stronger as well. Here, they're both flat. You can see it's very, very, very weak. Okay, so here again, a sign that we need to play caution to the wind for this particular pair. Weekly, just going to refresh the chart. You can see that we saw a huge sell-off that occurred in December, and then the continuation of that sell-off we saw a couple of weeks ago. But you can see that's totally changed now. Instead of price continue to take the range and to drive low over the past couple of weeks, we've actually seen price giving us an indecision candle, and then all of a sudden we started to see bulls coming into the market. So now we have this weak morning star. Okay, price is still trading below the 50 period moving average, which is a concern, as well as the 200. So there's still negativity here, particularly so, but we're trading into the underside of the 50 period moving average. So just play caution to the wind over here. The risk goes up because we're still actually trading below the 2 moving averages. So this will be my Bermuda rectangle. Ideally, we are to see a strong reversal, then price needs to be trading above the 50 period moving average. Then we can target the 200 with far more likelihood. The risk obviously drops somewhat, and the probability goes up somewhat due to that factor. So there again, we have to wait vigilantly for more sentiment to come into the market and then to drive high with more or stronger emphasis. And if we give something to the market, in this case giving in excess of 70 odd pips, but the outcome of here is more than 220, I like those odds. So I'm just going to pay caution to the wind here and just wait patiently. The other scenario is if we see price failing to get above and she retraces to the underside over here and she fails to get above that level, we could see then a continued sell-off drive as we head into the latter part of January and the start of February of this year. So there again, hence the reason why I need to see more of a statement. Get above the high of the previous candle, then we'll end up with, on the monthly, a very strong tweezer bottom or railway tracks equal drive candle, which will then emphasize a greater retracement. Fail to do so, she hangs around here and she starts to sell off again, then all we have is a pause, which is what essentially is still a negative move to the downside. The RSI is still tracking below the midpoint, which is a negative sign. MACD also negative because the fast line is below the slow line and the histograms are below the midpoint, but we can see that there's been a slow off in the selling sentiment. But there again, we can see that we've had an indecision and we've had a bull candle. So we need to see price driving low then, and the histograms getting stronger to the downside to emphasize continuation. There again, we need to see a statement of intent. Okay, so here again, if I drop down to the daily, just refresh it, you can see that last week we saw initial sell-off, but then the Tuesday, Wednesday, Thursday, Friday candle driving high. We're still not out of it because the 2 moving averages are, heaven forbid, still above price. Okay, so that's still a negative factor. RSI is flat on the midpoint. It's come from a weak point and is moving high, but it's flat. MACD, fast line above slow line, histograms above the midpoint and looking strong. But there again, I know that there's risk on the table because my 2 moving averages are still above price. Okay, so there's still a lot of ceiling to get through to really emphasize a defining dollar strength indication on the dollar yen cross. Far better one on the dollar Swiss franc, but not as clear cut on the dollar yen, and that's a concern. So just take or pay attention to that. Okay, so that's the 4 majors done and dusted for this morning's viewing. So I hope you just look at the market. You'll see that there's a lot of charts of matrices that are all over the place. So there's still a lot of uncertainty on a large number of the crosses. People will be focusing a lot of their attention on the pound this week, okay, because of Brexit, and defining because the Prime Minister is now trying to see her Plan B would be a far better proposition to the members of the House of Commons. And if she can get it past the House of Commons and then she can get it through the European Union, then we might be that much closer to getting a defining break away from the European Union as we head towards that 29th of March of 2019. Failure to do so, and the continue dragging our feet and the procrastinating, that would lead to further uncertainty, and we could see a lot more negativity on playing, or a lot of volatility play out, which can then really mix up the charts looking ahead. So please play caution. Be far better to sit on the side and let the volatility play out. If you are trading with very small lot sizes and you don't have a lot of liquidity in your accounts, it's far better just to stand aside and be there. Wait patiently until we have a far cleaner trend continuation play out on the charts. Until then, trade's really